Good morning, traders, and welcome to the live trading webinar today with Scott Pulcini. We do this every Thursday at 10 a.m. Scott is a professional futures trader. He's going to go through his live trading, the way that he trades futures, and we are lucky enough to be able to peek over his shoulder in the process. This is a part of the Bookmap education that you get. It's all free. Come to our Discord channel and learn from professionals like Scott, like JTrader, like Tom B. And then we also have our daily advanced webinars Monday, Tuesday, and Friday that go through reading the order flow in the live market. Okay, but it's not about trading. It is about order flow reading and being able to apply that. Let's go through. You guys know who Scott is. I have contact information if you want to reach out to him. I'll put it into the chat. Got to go through the disclosures for just a second here, and then we'll turn it right over to Scott, and we're going to dive deep into what's happening in the markets. The general disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation, demo, paper trading mode, and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. All right, with that said, Scott, why don't you go ahead and present your screen and take it over.
Alrighty, let's see here. Yeah, my screen?
Yes.
Good. All right, just watching these markets potentially sell off once again. Did a little head fake rally overnight, but some significant things are happening here. So first of all, this just came in Russell. This is almost 2 times threshold. My threshold for tradable icebergs stop runs, and Russell is 150, and you can see this was almost double that in 272. So this is sell ice. So this will be a meaningful area to trade. I was waiting for NASDAQ to retest. There was some major sell ice at the open right here. I still think it'll retest, but we're going to just have to be patient unless something new comes in. You can see these just waves of sell ice coming in here at the open. Down here, 140, 148, 78, 140, 100, and then 139 in this. So it was like almost 1,000 sell ice between these two zones. It's a very large zone, and it is what it is. I don't like trading large zones either, but you have to just adjust your size if you're going to trade this setup. And if this comes back here, my mouth is watering to get a retest failure of this zone. So I just have to basically put on a one lot. If your account size is smaller, then you trade micros. If you have like a $10,000 account, all you can really be trading on, if you're risking, this is basically gonna be like a 130 plus point risk trade. You can put on basically one micro. When I take these trades, I'm just adapting to the volatility and the size of the zone, right? So the volatility is up to 40. This is the 5-minute ATR. It's up to 40 points. And then the size of the zone, because when I place my stops, I do not place my stops based on what I want to lose. I base my stops on what the market deems important area, and that is an important area. So if I'm going to stop out, I'm going to stop out above this second zone. So again, we'll get to that if it retests. It usually does. So we will keep an eye on that. And then the most recent stuff here is the Russell. Let's see what happens when we break out of this zone. So that's step one. Step two is I'll check out the ATR. ATR is 45 ticks. Just move the decimal place here. 5-minute ATR. Get this over here. So that's step 2. Step 3 is we need to figure out what the lugs look like. Ludwig levels I use. You guys have heard this in prior webinars, very powerful, especially when you add them in with the real-time volume. Where's Russell at? There. So you can see we're below the blue lug. It didn't hold, but we haven't built new lugs yet. So I'm just waiting for new lugs to come in, because many times, again, you guys can listen to that webinar. I posted it many times in here that I did with Pamela Ludwig one-on-one, asking her questions. She said if the market, penetrates the blue or red lug and then gets back above it or back below it, that's a very strong signal because it didn't have the conditions to build new lugs. So I'm watching this closely to see if this pops back up here. But basically this setup that I'm looking at right now, even if we build new lugs, I'm going to need to see retest failure, ATR retest failure to take the trade. Okay, so there's certain instances I take the trade aggressively and there's other instances I wait for retest failure. This would be one of them, meaning we just determined that the ATR is 45 ticks, so I need to see either way out of here, 45 ticks, retest failure, 45 ticks, retest failure, and then failure means 90% of an ATR. That's where I will initiate the trade. So we'll use that for that. Actually just got filled on gold short. We'll go over the bigger picture stuff here, but this was a stop run. I don't have it on this computer. It happened right before I started, but on my other computer you can see here. Come on. See, this was right around, what time was this? Around 5 o'clock my time, so 7 o'clock Central. So you can see the stop run here. So I drew the zone there, and I just basically drew the zone on my my other computer. So that's where we're at there. So that's this white zone here. So what I did is this was above the yellow lug, so we'll just go over this quickly. This is my conservative entry that I took here. All right, new lugs in Russell as well. You can see the yellow. We're right on the yellow now. So I was going to wait for retest failure anyway. Now I'm really going to wait for retest failure for that setup in Russell. So gold, we're above the yellow lug. This thing is still bearish, intermediate term. We'll go over that, but you got when we're above the yellow lug, I wait for ATR retest failure. So here's your full ATR. ATR is 25 ticks. That's more than 25 ticks. Here's your retest. Here's your failure. I got a 90% of an ATR, and I'm short. One second here. So we'll come back to this. Currently short that. My stop's going to go 90% of an ATR above the top of the zone, right? So again, I stop my trades out where the market deems important, not where I don't want to lose money, more money. So the ATR is 25.4, so 22.86, so 23 ticks above this puts me at 96 is where I'll stop out of this trade. So I only put 2 on because I've got a risk basically over 100 ticks, 114 ticks of risk, right? But that's the way it is. I would love for the zone to be tiny and the ATR to be tiny, and then I'm not risking much. But most traders, we talk about this every day, every webinar, every day in my room. Most traders want to put on their trade here and then put their stop right here because they don't want to lose a certain amount. And the market does not care how much you want to lose. The market cares about important events. This was the stop run. That's what the market cares about. So you would be well served to be putting your stops above these areas and make the market prove it can get back through here. right? So this came up here. Obviously, this was buying, but it wasn't real buying. It was guys pukings. And you know, if the big money wanted to push this thing higher, they would have come in right behind it and pushed it. Instead, this failed. So this is a classic Dumb and Dumber setup. The money puke, retail trader puke, retest failure, short. And you can bet that's where we're probably going, probably on this webinar. So we'll see. So short that. I'm going to be very, very sad if we do not retest this at NASDAQ zone, because this is going to be an awesome short opportunity. I didn't take it aggressively out of here because we were above the yellow lug at the time, and that's just my rules. But I may have cost myself. So there could be certain instances where you say I'm taking that aggressively. This could have been one of them. We were right here and we were busting into this 2-day.
Gold stop sell GC 207 contracts.
Right on cue. So let's just do this real quick. So the worst case scenario now, I can trail my stop. That was just 114 ticks away. Now I can trail it based on the new setup, and I can add to this trade. I was kind of bummed because I've been talking in my room for days and how this market was going to get killed, and it always happens overnight. So it did sell off, but then it snapped back. So now this might be the real selling coming in here. So we'll see. Even though this is a stop run, it's not real selling. But yesterday there was a bunch of sell ice. And then there was nothing but pukes after that. So let's change this color. So I use white and yellow for my stop run. So again, ATR is up to 26.8. Again, this is like a dynamic way to trail your stops, adjust your stops. So 24.12. So I round up. So 25 ticks above this zone now, I will stop out of this trade. So that's 95. So you see now this is basically going to be a scratch trade if this comes back. If it comes back, it comes back, right? It just shows, like, if we're, you know, this is a bearish market. This is the opportunity for, this was a puke. The big money can come in and start pushing this lower. If this just rejects, well, it's just not time for this thing to sell off, and I'm out of my trade. You can see this is my entry. I'll lose a few ticks, and I'm out. Or I can add to this, I think. Let's see. Aggressively. I think we're below the yellow lug. No, we're right at the yellow lug. We're right at VWAP as well. So I need to see this below here. Any setups below this yellow lug, I'll enter aggressively, meaning I'll get a 90% of an ATR. So for this one, I still have to see ATR retest failure. So ATR is 27.3 now, so I need to see 28 ticks for retest failure. 90% of that, I'll add to this trade. Stop goes in the same spot, right? And then, you know, you're going to get days where you find a trending market where you keep getting setup after setup after setup, and you can trail your stop and add, trail your stop and add, and all of a sudden you got 4, 5, 6 positions on with no risk. And if you catch a runner, it makes your month, makes your year. Hopefully this doesn't just pop straight back and stop me out. That'd be cool to show you guys a runner. Let's see here. I got this on other accounts too, so I gotta make sure I get my steps in here. So wait and see there. Nasdaq still waiting for a retest of that zone. Nothing else has come in. I mean, I'll trade off of something new, but nothing has come in. There's been absolutely nothing in ES so far. Quiet as a church mouse. And then here, we did get an ATR below here. ATR again was 47.2. We got 40. The bottom of the zone was 23. So we got more than 47 ticks below this zone. So if this retest fails, I'm in. Remember, we built new lugs here. So I'm waiting for a retest of this zone, and it could go all the way into the zone. Doesn't matter. It doesn't always just retest the bottom. I'll show you one that happened overnight that, of course, they're absolutely perfect when I'm not awake. But, you know, retest failure, I'll be in this. So quickly, this was the overnight perfect Dumb and Dumber. I got a couple guys that are in that trade. Here's your retest right now. So hold on 1 second, and I'll show you the overnight. So 49.3 is the current ATR. 44.37. So 45 ticks below this zone now. That's 90% of an ATR. I will initiate a short. So this is 23. That's 83. 78. So I'm talking about the last two digits here. So I will initiate this trade. 78. There you go. This is a zone this morning. Again, I'm going to keep an eye on this because I know this zone is going to retest the NASDAQ, especially for the size that was up here. I will almost bet that this retests. I just need a little further to go. And then I'll short that. And I'll be short two equity markets, if I get filled on this. All right, so quickly, last night, I mean, they don't get any better than this as far as see. So I leave this one running all night. This is absolutely perfect when I'm sleeping. So this was, you can see this run up here. This is ES. Stop run. ATR, definite ATR. This was over 20 points, or close to 20 points. Here's your perfect retest. Here's your failure. So it's like that's how they're supposed to work, right? So again, when I'm sleeping, they're perfect. I don't know if you like 50-point trades or not, but that would have been really nice. Well, middle of the night to catch a 50-point trade. So that's what it looks like. That's what we trade. This would have been the conservative entry as well, right?
Hey, Scott. I mean,
Yes, sir.
maybe consider some traders in your trading room there to give them your cell phone and alert you when these things happen. I'm sure you'll love that, but
Yeah, well, exactly.
nonetheless, I
I pay
mean,
the
like,
price.
yeah. I mean, like, it's a big trade.
Yeah, I mean, I definitely would have sacrificed my sleep for that trade, but I mean, I just turned 50 years old and I need my sleep. If I wake up in the middle of the night and I like even walk in my office with the lit up screens, it's like I try to go back to sleep and I just paid, like it happened yesterday. I got up and I woke up at like 4 or 3:45 in the morning and I came in here and glanced and I forced myself to go back to sleep for an hour and a half, and I woke up and it felt like death. So it's not really worth, because that one trade, yeah, it would have been great, but then I'm just done for the rest of the day mentally. I'm like a brain fog midget. So, all right, here we go. This is what I was waiting for. So let's get this locked and loaded. 43.6 is your current NASDAQ ATR. 90% of that is 39 and a quarter. So on retest, I will take it as a retest if it gets most markets 2 ticks or NASDAQ 2 points. So we did not get within 2 points there. I don't think the bottom of this zone was. No, we didn't get close there. 83.75. So we need a little higher for the retest. If this turns around and sells off, then that's the way it goes. But these are my rules, right? I don't chase trades. I've watched thousands and thousands and thousands of these setups. I wait for the retest. And again, it doesn't mean like you saw that ES one where it just touched the bottom and went like that. Doesn't mean it could retest all the way back in here. But when it finally fails, I'll get in, because there's going to be times where it retests the zone and then it just rips right through it, right? Like it'll just do this. That's why I wait for retest failure. That's confirmation that the area is solid. I forgot to bring my waterboarding over here. So this is Tick Strike. This is a audio alert. It's a again, I know a lot of you guys are on these webinars every week, but you got to remember there's a lot of new people coming in from in here and YouTube and everything else. So I got to explain a lot of this stuff over and over and over. So bear with me. This is just an audio alert. It goes from 1 to 15, 15 being the highest. And it's an algorithm that tells you the size of the orders coming in and the speed. So it just helps you really determine when there's real trade going on. And you can use it to, when real trade's going on, or you can use it in important areas where you hear nothing going off, right? So you can see the 3 equity markets that I'm following. And then these are the main, obviously, the highest weighted stocks in NASDAQ and ES. So it's really important to see what these are doing. I liken it every day to waterboarding. I've never been waterboarded, but I would assume that's how it feels, because it's great when you have a position down going in your favor. But here's your retest, by the way. But when you you have a position going against you, you have to watch it, and then you have to hear it. It's not fun. So, right, 46.79 is now the new ATR. So 42.1, so 42 and a quarter ticks out of here, I will short this market. And obviously the most I can trade is a one lot because of the risk I have to take here. So 40 points is 43.50. 41.50, 41 quarter. That's where I will short this. Boy, get in there before the market gets down there. That was a quick little pop back. All right, 1 second here. I gotta put these in my other accounts. All right, that was fast. That's what you call retest value right there. Hold on. All right. All right, and the good news is I didn't get filled to the tick, so that's positive right there. Because I usually get, like, if this turns out to be a loser, it's like I'll fill the exact price and then it'll turn around. And obviously, it would be better if I don't get filled if it turns around. So I can't complain about that, at least this time. It happens 5 times a day, every day. So get ready for a couple of them. So what I'm going to do here is, because we talked about this ice that just came in. Actually, let me make sure. Did I get filled on Russell here? Sure did. All right, so let's get this in here quickly. 53.3 is the ATR now in Russell. So 47.97, so 48 ticks above here. That's where I will stop out of this trade. Puts me at 51.99. So I got that on. Awesome. Now I just got to be short ES. So what could possibly go wrong being short all these markets? Because they never do bungee jump nonsense, straight up moves like yesterday out of the middle of nowhere. I got stopped out of that one. I was short in ES, but I got back in and made it back. But still, it was like literally like 3 times volume in the middle of the day out of nowhere. And I still think it was a news story, but it never came across. All right. Oh yeah, let's go. So the stop. That natural gas number's coming out in 5 minutes also. So back to this quickly. This was all the sell ice, right? So the first band was this 145, and I drew this zone here, and then it came in. Everything, all this came in after. So like we went over, this was like 700-800 in this zone. So because this was the bulk of the size in this zone, I'm going to put my stop above the top of this zone, which will also put me outside of this, but it's going to save me like 30 plus points if I were to do it above this, an ATR above this zone. See what I'm saying? So this one was only that 145. I mean, you could put it 35 points above there, but I'm just going to go 35 points above this. I mean, an ATR above this one instead of this one, because this was the bulk of the size that came in. And again, as you learn this, you can start to make tweaks on where you want to place your stops. You just got to make sure it's out of the area, not because you don't want to lose money or get back money or whatever. 41.44 is the ATR, so I got to go 41.5 points above here. That puts me at 88, 89. So basically right outside that zone, the top of that other zone. All right, there's my one guy. And it is what it is, right? Like, I'd love to have 4 contracts on here, but I can't. You cannot risk that based on account size. You've got to trade according to what you can. Again, we have this risk calculator in my trade room. You can probably find it online. That's not it. That's the ATR. Where's the risk? Again, I show this stuff every time, but you know, for instance, so this is ATR is 90, and I'm risking another. The size of the zone is another. So then that's another. What is this? 87. I'm sorry. So the size of the zone is about 70 points, right? Then I'm risking 46 to get in. 46. That's like 160 points of risk, right? right? But that's what the volatility is telling me. And so I know this could be a 200-300 point move if I'm right. You can see here, the most, I'm already at a 2-lot risking like 80 points. Once I get over 85 points of risk, over 84 3/4, all I can trade is one, right? And then there's a point where you can't trade any. Like for instance, if you're risking 100 points in ES, you can't even put the trade on. And you plug in your account value up here. You risk 1.5% to 2% of your trade, and it tells you what you can risk. If you're trading micros, say you got a $12,700 account, that you can put on $250 of risk on your trade, and then you just make these micros. You don't change anything because it just be 10%, right? Just like you're making 10% of that. So again, I go over that every week. So if you're confused, just throw it in the room. I'm sure Bruce can answer it. All right, so let's find some spots where we may get out of this. You know, it sucks that this is another problem that guys have, that they won't trade micros for some reason. They feel like that's just not, sufficient or whatever. Like their pride gets in the way of trading. There's nothing wrong with trading micros, especially if you're, trying to learn how to manage multiple positions. So for instance, I only have one on here in NASDAQ. That means I'm one and I'm all or nothing, right? If you have micros on, if I had 10 micros on, which is equivalent to one NASDAQ, I can be getting out at certain areas. Like this isn't a bad area to cover some, right? I got a quick move down. This is 1.5 standard deviation of VWAP, right? Here's VWAP. Here's 1 standard deviation, which they call daily value area. Here's 1.5. That's not a bad area. You can see this has bounced off the 2 twice. So when this comes down here, I'd love to piece out of some of them, but I only have 1 on, so that's why you put on micros. So I don't have micros set up. That's why I didn't do that, but I'm just saying for you guys. So here's another important area. So I got to make a decision here when we get to the bottom of this market profile if I'm going to bail on this, because that's also confluent. You see that right there, 1306.325. That's also confluent with 2 standard deviation. So I want to determine if it's going to bust through there, but if it struggles at all, I'm going to get out of this trade, right? Because I'm already short NASDAQ. And here's another, Russell. Here's another thing you want to watch is relative volume. So when you get to 2, 1.5, 2, 2.5 or more standard deviation of VWAP, there are so many algos that kick in reversion to the mean. So you want to be ready, unless there's big size coming in, big money, to keep pushing this down lower. This is going to snap back like it did here, like it did here, like it did here, right? So I'm going to get out here now, if this doesn't just plow right through here. And you got spot gamma levels down here too. So I'll just take my quick profit and get out. I'll give it a chance. See, we're right here. Right? Let's see if we can. All right, I'm out of that. I'll take that and run. Get out of all my accounts. Of course, I'm losing money because I can't get not fast enough. Okay. All right, so that's fine. So once again, if I had multiple positions on, I wouldn't have to get out of everything here because this thing could keep motoring down. We are below the yellow lug now. So the main objective here is blue lug. So if we got down to blue lug, I get out of everything I had, right? But if I have multiple positions on, I get out of one here, confluent with these 2 things, right? Or a couple, half, and then let some ride. But I only had 1 on, so it's 1 and done. That's one of the main benefits of trading micros. You can trade multiple positions. All right, so let's check out our Russell. See what's going on here. I'm just happy that, look, you guys, it doesn't get any better than that. Look at that. That is an exact, I was sitting here for an hour waiting for this retest. Perfect. Just like the ES. There's a reason that happens, right? The markets come back to areas where traders get smushed. So all these buyers in here were all aggressive, like, yeah, we're going to get our bungee jump that we get every single time, right? Buy, 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 buy. Oh no, you run into a mouthful of sell ice.
Stop by CO. 210 contracts.
When this comes back to this area, these traders that were able to hold on and hold their breath and pray, when it comes back, they are peeling out of their trades, and that causes the next wave down. That's the whole premise behind retest failure. And again, it's not a hypothetical thing. This is exactly what happens because when I was the big trader, when I had thousands of contracts on, again, it was never this far in my face. because I would be blowing out my firm. But in ES back then, if it was like 3 or 4 points in my face, I'd be holding my breath, like praying that it will come back to the area so I can. And I would literally say, God, please, God, I promise I won't be greedy here. Say I'm long, right? Say I was the one that ran into this, and I'm long, and it does this. I'm like, please, when it comes back, I'll just get out. I won't try for a profit. I'll get out, and then that's that. And that's why all my setups are real life things. They're not hypothetical nonsense like some of these, I'm doing air quotes, educators are out there. They're just guessing on what's happening, right? All right, so we still have this on. Let's see where we can get. I do have multiple of these on, so we could peace out. Let's see where we're at. Not peace out like the peace sign. Funny, I'm not even getting any chuckles from Bruce today.
Yeah, there was an eye roll instead.
That's pretty bad.
Yeah.
Peace out. All right, so you can see where this is hugging. This, we call this a hugger when it did reject. So you got to be careful, right? Like this is rejecting, but it keeps going lower, lower, lower. So I could get out of one here. The problem is I don't have any. Let's just check out our chart here and see what happened there. All right, I just scratched the gold trade. This little donkey couldn't go for me. So again, tiny loss, and I based it off the new setup. But I put myself in position. If this would have held and kept going, I would have added, and it could have been big. And there's still maybe opportunities there, but I'm out for now. So let's just see where we're at here. Bigger picture. This thing's in major trouble. All these markets are. Just from, I know fundamentally everyone's saying it, but just technically too, right? This is a massive fail breakout of many months, multiple months. Tried to hold the high volume node here. Had another fail breakout of this little dude, and then it's just bye-bye. See ya. See you at 0. So I'm gonna get out of one here just because the volume is not very good. Relative volume, you can see here. And I'm just waiting for a snapback right here. This is showing me that we're just barely over 100%. Actually, let's make sure that's accurate. Look at this. Let's scrunch this thing. Yeah, it's not great. So I'm going to get out of 1, which is fine. Right? If this keeps going, I'm still happy. If it snaps back, then I'm not beside myself that I wasn't smart in getting out at 2 standard deviation of VWAP when I know algos snap it back all the time. That's what they're there for. Let me change this. All right. This is the big winner, by the way, because I forgot to put it on my other account. So if you're short NASDAQ or short Russell, congratulations. Still nothing in ES, though, which sucks. And you could probably expect a little bungee jump after these guys get their fills, I would think, right? It's been in there forever. Remember liquidity, that the longer it's been in there, the more of a magnet it is. And the other thing too, yesterday, it's so funny where this went. I put in the room, this was, hold on, let's see if I can find it here. Let's Bookmap. Let's see if I can find it. Just to show you guys what a magnet this, here we go, right here. I was short yesterday and I said my exact words, liquidity above worries me. That was all this. So you ready? Here you go. Whoa, look at that. Look at, where do we stop overnight? Once they get their fills, then we can sell off. Let's take a little peek just to show you guys how rigged these markets really are. And again, you can sit here all day long and say, this is rigged, it's manipulated, blah, 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 blah. That's fine. That's not going to make you money. If you can't beat them, join them. Look at this. This is the exact area. Look at this.
150 contracts.
There's that liquidity. Got their fills. Bye-bye. Guys, it's all a game. And if you don't believe that, then you're in the wrong business. It's a game, and it's if you can figure out what they're doing, then you can join them. That's it. All right, let's see what's going on. I'm trying to avoid trading this piglet. This thing is just absolutely eating my lunch lately because you get in a trade and then there's every single time there's some kind of headline. So let's see, this was a big stop run.
Nat gas iceberg by NG. 151 contracts.
I will trade nat gas though. That thing has just been incredible. So like I tell you guys every week, you should have other markets you're watching instead of just ES and Q. Or just, a lot of you guys are just staring at ES, which is ridiculous. Like, why would you force yourself to trade that thing most days, right? It's like when it's not rolling around and good size trading, move to another market. All right, so that was the stop run. This was 138 sell ice. I'm not going to mark that. That's not threshold. So we'll see what happens here on this. This is the stop run. So this is what I'm talking about, right? So this was buy stops, not real buying. Guys puking. Guess what? Someone came in and continued to push us higher. That's the big money that kept it going. So we saw in ES earlier, buy stops, no real big money, death. This one, the big money pushed it, right? So now I'll play that retest failure.
151 contracts.
Hold on. I possibly could have been in this long aggressively because I got to look at my lugs, but either way, if it retest fails, I'll go long. So now we got a new setup here, right? That was a good cover, one of them. That's only 100. That's 181. That's threshold. Now we can draw a new zone. We can trail the stop, or we can add to the trade. Just seeing if I should incorporate. Well, this buy ice is in this sell ice zone, so it's even better, right? As far as the icebergs are committed traders, right? Guys are buying. Someone big is hiding orders. That's what icebergs are, hidden orders, and they're absorbing their orders. So that's why this is important. This area is important because there are committed traders in here. And when it moves out of here, you're going to get a bigger move. So now what I can do is check my ATR 54.3. Take 90% of that. 48.87, so 49. So 49 ticks above here puts me at 02, or not 02, but I mean it is 02, the last two digits, right? So I can put my stop here. So watch this, 1870.0.2. So now I can trail this thing all the way down here. That was pretty close. And what I can do is add to this, right? So 48, I know we're below the yellow lug, right? Because we build new lugs. I'll show you that here again in a second. Make sure I got this right. Yeah. So 49 ticks below here. Bottom of this zone is 17. So that 50 ticks gives me 67, so 68. I think that's right. I'm having problems with math lately. So I will add to that trade. And then I'll put the stop in the same spot if I get filled. Right? So let's just check. I know we're below the yellow lug because we don't have lugs, like I said. Right there. So if I get filled on this, I'm looking at baby lug, which are these smaller ones. Maybe get out of a couple. Not maybe, I will, especially because that'll be like 4 standard deviations from VWAP. And then blue lug is my ultimate destination. Right? All right, been talking a lot. Any questions, Bruce?
Yes. Bert was wondering about, do you always scale out when you hit a consolidation or one of the standard deviation areas?
Most times I'll do it. Well, extreme, yeah, because unless I see, like I was showing you, relative volume. If I see heavy relative volume, then I'll try to hold on to it. But yeah, so when you develop your trading plan, which you all need to be doing, you just have set okay. If you were programming an algorithm, what would you do? You've got to put in your variables and and your instructions on what to do, right? And then the algo just runs. So the algo doesn't say one time when it comes down here, so the instructions are to get out at standard deviation. Say relative volume has to be less than 1, something like that, right? So the algo doesn't, one time get out, another time hold on and say, yeah, I'll hope this goes, right? So you can do whatever you want, whatever areas you deem important, fine, but you have to do it every single time. I talk about this all the time, right? So Yes, a lot of time, I mean, you're getting extreme here. This does look like it's a hugger, but the volume isn't great. So at any moment, this thing can do that, right? And it's not going to surprise me one bit. So yes, I will get out. So say this comes back down. So if this comes back and tests again, will I get out? No, because I'm going to be, we got a new setup there anyway. So, it gives me more confidence because now I have a new setup. Now I'm just trailing my stop based on this new setup, right? So before my stop was like up here, or there wasn't a zone, but that was my stop. So that would worry me that we ripped up here. But now I don't have to worry about like getting out because my stop's so much closer. You see what I'm saying? So on the last two that I have on, and then I'm potentially going to add to this. So it is risky adding the trades at negative 2.5 standard deviation or two. And this is again 1.5, 2. That is very risky, but there's a setup here, so I'm not risking that much. I'm putting on this trade, right? So that's the beauty of your real-time volume setups. If you're just trading that, staring at this chart, well, where's your stop going to go? You say I'm going to stop above the yellow lug. Say you have Ludwig levels. Okay, that's still a lot of risk, right? Or like, where are you going to put your stop? Well, there's a real volume setup here that it shouldn't get above there if this is going to remain bearish, at least short term. So every time I've ever been on here, this is the biggest edge you can possibly have in futures trading. By far, bar none, without a doubt. In my 24 years of trading, I've never seen a better edge because this is showing you this is what drives the market. It's not price. Price does not drive the market. Volume drives the market. So I don't care if you've got, here we go with the ranch, you guys have all heard it before, right? We got the 200-day moving average cross, the 50 of the 200. Okay, great. Yeah, is that important? Sometimes. When is it important? It's important when real money is trading in those areas. That's when it's important, right? So I don't care where we're at. If I'm not seeing real-time volume, agreeing or disagreeing, then it's not important to me, right? So there's no bigger edge, guys. I'm telling you, I've been saying it since the second I saw this thing. You guys have heard the story as well. When I got back in the business, I got knocked out 2013. I spent seven years trying to reinvent my style after being $1 million trader and basically going to zero because I couldn't make money because the algos were killing me. I had to get out of the business for 4 years. When Dr. Brett Steenbarger, who wrote the book Enhancing Trader Performance and many other ones, probably a top trading psychologist in the world now, he called me on the phone and said, "Hey, you want to check out this new and this was before the SI indicator, by the way. He's like, you want to check out this new software called Bookmap? He's like, it reminds me of what you used to do, how you used to view the market." And he was talking about this stuff and the liquidity and everything else. And because he sat behind me for a full year, because when he wrote his book, he wanted to see how I made the millions of dollars. He wanted to see what made me tick, right? And you guys can read the book, and throughout that entire book, on the afterward, you can see that's all documented of what I did and back then, right? So he told me about this. So the minute I saw it, I'm like, I'm back. Like, this is what I needed to see. So, but I was so jaded from futures trading, and especially this donkey. I hated the ES. I still don't like it very much, but I've been actually doing very well on it lately. I'm like, I'm not trading futures. So if I'm coming back, I'm going to trade stocks. So I train how to trade stocks through S&B. They're all over the internet. You guys heard them. They're the real deal. So I learned how to trade stocks, and I was all ready to trade stocks. And then this came out. And Bruce kept telling me about it for literally 4 months. So you got to check this out. You got to check out the CME MBO data. We got this thing that reads this is enhanced data. It's showing us we're 100% accuracy, stop runs, icebergs. And I'm like, yeah, okay. Literally for 4 months he was telling me. And then they finally got it where set up, and then I started to watch it, and I'm like, this is the most powerful thing I have ever seen in my entire life. And to this day, that was 3 years ago, this is still the most powerful thing I've ever seen in my life in futures trading. So little rant, but I don't put it this way. I don't know, and I say it all the time as well. I don't know how traders make money or how they trade just trading off of this stuff. This is easy to see, but it's not easy. It's easy to see after the fact, and you can see failed breakouts and failed breakouts, but it doesn't give you that zoomed in look of the real-time volume to really control your risk and understand what areas are important, what areas aren't, et cetera, et cetera. So I can't say it enough, guys and girls. Like, this is it. This is it. There's no bigger edge in trading than this stuff. So, all right, next question, Bruce.
Yeah, I mean, no, it's a really good point here, and now that the stops and icebergs and this MBO data is becoming more known and used. However, let's just stop for a moment and back up and consider. That's amazing transparency. We've never had access as retail traders to anything close to that. There's a tendency for I really like hearing this, Scott, that I mean, you believe in it and you're still following it. The reason being is that I think a lot of retail traders, when they first come across something, it's like, wow, it's all exciting, it's great, this is amazing transparency, whatever, and then they move on to the next thing after that. I mean, like,
Right.
though, and if a MACD and a MACD crossover was the next thing, that's what they would move toward, even though it has a lot less transparency and a lot
And that's
less.
why traders don't make money, because
It,
they're always trying to find
I just
the perfect thing that there's no risk. Guys,
yeah,
there's risk
yeah.
with this,
There's
right?
risk with anything.
Because it's
Exactly.
markets. Anybody, it's in trading in the zone. It's a perfect example how, anything can happen at any time. It doesn't, yeah, these setups are the strongest thing that you're ever going to see, but that doesn't mean if Saudi Arabia comes out right now and says, say we're long here and says we're gonna flood the market with production. Well, guess what? This is out the window, right? So that can happen at any time, but you have to accept that risk. But the majority of the time, the markets will trade normal and respect the areas, and that's where you make your money. But anything can happen at any time. But traders are always consistently, again, this is in trading in the zone as well. They're trying to find something that is risked so they don't have to risk. So it's just like the magical formula. There is no magical formula. This is the most magical you're going to get. And I will go against anybody in the world that tells me otherwise. I mean, besides, huge firms that can just push the market where they want, right? And that's the magical formula. The magical formula, when you have enough size just to push the market, like we saw the manipulation in the ES overnight, things like that, right? But other than that, for the retail trader, you're not going to get anything. I don't care. I'll put this up against you tell any of your trade room guys, I will go head to head for them. We'll do like a 3-month challenge or whatever. Again, there's variability there where any given day you have a drawback or drawdown or whatever. But I'll go against anybody head to head, anybody. So you tell them to bring it, and we'll make it a little competition and see who makes more money based on what they're doing and based on what I'm doing. Guys, I've been doing this for 24 years. I've been watching these for 3 years, thousands and thousands of setups. Like, I don't know, unless you want me to slap you in the face, I don't know how else to get through to you. All right. I'm doing a lot of ranting all of a sudden, Bruce.
I'm waiting. I was waiting for it. Um, so yes, we do have other questions in here, and
Okay.
let's
Is one of
see.
the questions, why does gold give you the middle finger continuously? Is that one of the questions?
No, but I do like you were referring to all sorts of like farm animals today, like pigs and donkeys and etc.
That just helps me like process mentally. I gotta. You should hear me when I'm by myself. They're not such. The words are not that nice. I can tell you that.
Let's see here. Let's see the black parallel lines. How are they determined? Like and maybe your color coding. Like the yellow lines that you have there, or black lines that you're
Right.
showing
So I'm
now.
just I'm just trying to make these so we know what the setups are, including me. So this was majority of this was sell the threshold again. Russell, my threshold, meaning the amount of volume I need to see in these setups has got to be over 150 in Russell, right? 150 means nothing in ES, it means everything in Russell. Yeah, again, I've determined this by watching thousands of these setups. That's what my SI indicator course goes over, these setups and the thresholds for each market. I think I've got like 24 markets on there. So what I just color code these. So the sell ice is black, buy ice. So there was buy ice here earlier. You can see it up here. I try to make the same color as this, even though I'm colorblind. I think that's close enough. Then I try to use yellow and white mostly yellow for stop runs, but if I have multiple of them like this, like in gold, then I'll make one white, one yellow, right? So that's it. And then I draw the zone based on the price action within this spike. And that's it. It's not, trust me, it's not technical
Okay.
as far as what I'm doing here.
And let's see. Can Mohammed's asking about, do you look at different well, do you look at delta volume divergences as well?
Yeah, but you got to be very careful, right? So we look at that in the room, and I think you're referring to this, right? The cumulative volume,
Yeah, I
cumulative
believe
delta,
so. Yeah.
right? So, a lot of trade, you got to be very, very, very careful using this, right? So let's see if we can find an example. It's good to watch, and there's many instances where it's spot on, but there's other instances where, let's see, just trying to find. So actually, let's take a look at NQ today. I'm sure this is a good example, right? So this was. It's not as distinct as I thought I was going to be. So when we came up here, this is where you have to be careful, right? So say you're like, oh yeah, I want to be long. Say this cumulative delta is moving up. All this is showing you guys is who the aggressor is in the market. That's it. Meaning cumulative delta goes up. That means there's more taking of bids than selling of offers. The aggressive taking of bids than selling of offers, right? So when we came up here earlier, pre-market or right when at the open, the cumulative delta is actually not really showing on that. That's why I was surprised. But this is a sell ice. So guys were aggressively taking offers, right? They were buying offers, buying offers, buying offers. That's what cumulative delta shows you. The problem with just playing cumulative delta on its own is, yeah, there were aggressive buyers. How did that work out? Because they ran into 900 sell ice, right? So those were icebergs, concentrated icebergs that were absorbing those aggressive buy orders. That is important to know. So cumulative volume does not tell you the whole picture. You want to know, hey, are there aggressive buyers and there's no sell ice? That's good to know, right? And so CBD is going up, or CBD, cumulative volume, cumulative delta is going up, and there's no sell ice. Then yeah, I mean the aggressors they're keep buying, they keep buying, they keep buying. But if this thing's going up and it's actually running into a wall of sell ice, that's something you want to know, right? Especially if it fails. So like I said, I'm surprised at the open here. I mean, it went up a little bit. So here, right here, let's actually make this a little. So it did go up a little bit, right? So this is where you could have been in trouble. You could have been sitting here and you see this move up. You're like, yeah, cumulative delta's moving with it. They're buying it. Yeah, I'm long. You had no idea that they ran into 1,000 icebergs, sell ice, concentrated sell ice. It was probably one house, to tell you the truth, one big entity. And oh, no. Because when this fails, guess what that is? That's the puke, right? That's guys getting out of their aggressive buying. Usually it's a lot more pronounced than this, but so yes, I will keep an eye on it. It's really so where you want to use this and pay attention to it as it is in very important areas, right? So say for instance you don't have levels. That's obviously a very important area. Say you don't have this. Say you're just looking at this, right? Say the market comes up here one time, touches this, does this, comes back, touches it again, and then in this picture you see that's the first wave, and then the second wave is like that. And say we go a little higher, and the second wave is like that. Well, that's a delta divergence, right? That means we came up, made a new high in the market, and there were actually aggressive sellers. That's where you want to pay attention to it, right? That's where you can say, okay, something's up here. The buyers are not winning per se. The buyers aren't the, I shouldn't say they're not winning. They're not somebody that keeps hammering this market, and we're at an important area. I'm going to give that a chance on the short. That's, barring you don't have Bookmap, right? That's where you can use that. But you've got to be very careful and understand aggressive buying may be running into, it's going to show as positive, but it could be running into sell ice. Then that's the most important, because that's who runs the market, are the big players. Right? I hope I explained that correctly.
Yeah, I mean, I actually have ranted on this quite a bit in the past, and it's well put, Scott. Who's taking the other side of the trade?
Right.
What is the indicator actually showing you, and what is it not showing you? And that's what you're covering there, because without that kind of context, you might be getting the wrong inputs or the wrong kind of information there from the indicator.
Right.
So
Exactly.
the context is super important. We got a few more questions in here, Scott. And first off, Corwin, welcome. Good to have you in here. See, Adrian's asking, seen yesterday on the ES 2000 icebergs on the subchart, and immediate 100 executed, 1900 canceled. Oh, I can answer this. Never mind, Adrian. On that, I'll answer that in the chat. The Let's see. Okay, and
Check
other
this out.
questions
That's
in here in
something
Discord. Do you only mark iceberg thresholds and consider them for entering, or stops as well? You're marking up both. So any sort
Say
of
it again.
um,
Oh yeah,
the,
I source stops.
yeah,
Yeah.
Vladislav, it's more about these meeting his thresholds, icebergs, and stops. Okay, so basically, if I can recap, I mean, Scott's looking for something significant from the stops and for the icebergs. It's not a signal, it is an alert to pay attention to those areas and then put the context of higher time frames and other things all together.
Right.
I think that's it. I think we're all caught up.
Cool. I'm just drawing this in that gas. There was you can see these two spikes. You can see this iceberg on chart. This is one house, this white line. But you can see this was 152, and then yet another 106. So between these two icebergs, that was 250-ish. And you had a little bit more here. Here we go with the waterboarding. So this is what I'm talking about, right? So this Russell might have already been stopped out. It's pretty close. It's coming back. So it's like I have to watch this thing come all the way back, and then I have to hear it. It really grates on you after a while. I mean, I still love the thing. Don't get me wrong, because especially like if I'm not staring at a market, then like I can hear, hey, crude, they're buying the heck out of crude, or
Crude stops
like
stopped by
that.
CL 150 for contract.
Do you see the control I have over the market, Bruce? Do you see that? So they literally did that just to show you guys right when I said that. Isn't that amazing? Did you see this thing light up, by the way? So if you're not watching, that was a joke. If you're not watching the market, it lets you know, hey, something's firing off in there. So this is 156. My threshold here is 150, but I got to see some serious size in this market to trade it right now. I'm just so sick of throwing away money in this market with the headlines and stuff. So I'm just going to let this one go. I was going to possibly trade this on a retest failure, the stop and hold, but it never retested. So this was a stop and hold. Right, here's your stop run. That's that. And I was going to take a retest failure, and it just never did. Now, see how this is firing off now? You can definitely see it, obviously, on Bookmap, but it's good to hear, because if you're not staring at the thing, you have no idea unless one of your alerts are firing off. Hey, look where we're headed to. This is funny, too. You think this is the same house? Look at this. So they had it up here. They're like, you know what? I don't think it's going to get there. Let's move it down here. And guess who's pushing this into it? I wonder if this is the same house or same big trader that has this offer in here that is buying. Guys, this is the game I used to play. That's why I know what's happening, right? I used to load up in the ES 1000. We've talked about this before too, I know, but it's just good to see. 1,000, right? So then the market would be down here, and I start buying a little bit just to see how the market would react, right? I'd buy like 100, another 100, and it would just go, and I'd be like, oh, okay, I guess no one's willing to sell. Then I'd buy another 100, another 100. Then when we get close to my order, I would just step on the gas. I'd buy like 300, 400, 500, 300, and traders would see that, right? Because you can see the transactions, obviously. Back then you didn't have Bookmap. I could imagine what I would have made back then if I had Bookmap. But they see the flurry of activity and they jump on. They're like, oh, look, big money's buying. I'm going to jump on. And then they jump on my coattails. It runs right into my offer. I get filled on my 2000, done. Then it's rinse, wash, repeat. Just all day, every day. That's how I average $50,000 a day for every trading day of 2003. That, you can do the math, that adds up to $10 million. That's what I made in 2003, playing this exact game all day, every day. So that's what I'm telling you when I'm telling you about these setups, what's happening in the market. I know because I used to play the game. So the one thing, so if you are, say, you're long and you're watching this, just be careful as it gets close here. Many times you have these algo front runners that pick up the size when it gets close, and they'll turn around and push it away from the size because they expect the size to chase it, right? So for instance, if you were just to drop, someone comes in and drops a 500 lot offer in, the market's going to run away because they're trying to get this 500 lot to chase it down. And then the guy finally gets filled, then it'll come back, right? So my point is, this will still get filled, don't get me wrong, but you may get tortured. Say if you're long right now, it'll come like right here. The algos will pick up the size and they'll run it away like 80 ticks. You're like, damn it, right? And then they'll get filled eventually. But just be aware of that if you are playing to liquidity. Don't mess around. If it gets close, within a few ticks and starts to run away, just get out. Don't expect to fill every time. Here comes the waterboarding too. This is perfect. Awesome. At least I got out of the NASDAQ. It's still not filled on this, but looking like it. All right, so I'm not going to trade that. Crude, that's set up, so we'll just wait for another one there. I'm sure I missed a trade here, looks like. Let's see if I would have been short aggressively. No, so I would not have been in this trade yet, because why? Because the way I trade these, for above the yellow lug, I wait. So there's a setup. I wait for ATR retest failure, and obviously we did not get a retest of that yet. The key word is yet, and I will be willing to bet, especially especially if nothing new comes in. Especially if nothing new comes in. Why can't I find my? There it is. Meaning another setup. This will come back and retest this area once again because there's caught traders there, and it's just somehow, some way, it always comes back. Then they could fill, and then it goes, right? Or it could just do that, but that's the usual tendency. So anyway, I would not be short this aggressively. I will wait for this, then I'll go short aggressively. And I'm telling you, this is one of the markets. I usually say crude, gold, soybeans. Crude and gold have been an absolute, like you saw in gold today. It's just a complete whipsaw all day, every day, and then crude's all headlines all the time. I know there's been headlines in natural gas too, but I'm telling you, this is the most algorithm. I mean, look at this chart. You tell me this isn't all algos. When you look at a chart in Bookmap and it looks like a Christmas tree, then you know it's just algo ridden. Most people would say, well, yeah, well then I don't want to play in that, but you do, because the algo's worst nightmare is the big money, right? So when the setups work probably the best in this market. Granted, so say I go short, you're going to go through this for about 3 hours most times. So just be prepared. You're going to go on a ride, because these algos are going to whip it back and forth, but they whip it back and forth in meaningless areas. This is why, guys, you don't want to be putting your stop in meaningless areas, because you will get stopped out. That's why if you were short this setup, for some reason, and you took it on your own, you need to be putting your stop here. Not, I get short here and I only risk 30 ticks. Guess what? This is going to do that all day. This is what the algos are in there for. That's why they're 90% of the market, because they take your money. So anyway, the point is, this thing, algo ridden like crazy, but once the big money comes in, they just they turn them off. And you get huge runs, like minimal risk. You risk like 60 ticks to make 300, and I'm talking like in 10 minutes. It's been an awesome trade. So I highly recommend you watch that market. Here comes more waterboarding. Awesome. Yeah. Again, big deal. If I get stopped, I get stopped. I was able to trail my stop based on this new setup, right? And I'm going to scratch this trade too, because this is what trading is. It's like, the whole goal of trading is to try to find that big run, right? So it's like you put on a trade, make a little, put on a trade, lose a little, make a little, and then you have that trade, like that potential go trade, where it's like set up add, set up, add, trail your stop, add, and then you have a month making, year making day. That's how the majority of professional traders, the bulk of their profits slash income are only contained within maybe 5 to 10 days of the entire trading year, right? Because that's what trading is. It's not this consistent. That's another fallacy. Read Reminiscences of a Stock Operator, written 100 years ago. He talks about it back then, where traders think that this is like a normal job where they're going to generate a consistent income every day. It's not going to happen. You may get lucky for a week or a month. You're not going to have a consistent 500. I see this all the time on the internet. Well, I can average $500 a day, or I can make $500 a day, then I can quit my job. That's great, but it's not going to. You're not going to average five. You're not. You can average $500 a day, meaning you can make 50, lose 50, make 100, lose 100, and then you're going to have a $2,000 day, and then you're going to lose a little, make a little, and then when you average it out over a year, yeah, it'll average out to $500 a day. But if you think you're going to come in these markets and make a consistent $500 a day every single day, find a new profession. I just got stopped out of this, and it was fun to be waterboarded. So see that? So I was able to. Does it suck I got stopped out? Yeah, we got out of one earlier. The rest I let ride, and then I trailed my stop because of the new setup. This is actually now a bullish setup. So I can actually take retest failure on this to go long. Actually, I may have missed it here. Let's see. Please don't tell me this was a full ATR. Of course it was. ATR is 54.7, so 55 ticks. The bottom of the zone was 53, so that was 08. Did we touch 08 before we retested? Pretty close. The ATR was probably a little less because before this big move that made the ATR increase. So I probably would have been long this setup. I'll tell you for sure. Let's see. So I can complain for the rest of the webinar. 803, the ATR 803, 805 time period. I'm sorry, 8 o'clock time period was 53. No, I wouldn't have been. That was not a full ATR. It was close, so at least I can't complain about that. All right, so I'm out of that. I'm shocked there has not been one setup in ES today. Shocked. But this is what I'm talking about. If there's nothing going on in the market that you stare at all day, then you need to have 3 to 5 other markets that you keep an eye on. So you're not forcing trades when nothing's happening. Right? Like yesterday, my afternoon webinar, we basically sat there and watched paint dry. Nothing happened. Like nothing. We just sat there and I complained how bad it was, and then we wrapped up the webinar. That's how it is sometimes in this business. This is interesting though here. This is kind of the algo front run I was talking about. So that this got their first fill, tried. Algo picked up all this size and said, no, we're going to run it away from you. But just remember, this is here. I'll bet you we come back and fill it at some point today. So I also want to take a look at what this real-time spot gamma hero is looking like. This is interesting too. So I showed this in the room. I'm going to really start paying attention to this to put on some longer term options, maybe not longer term, like a couple weeks out. So Tesla was on here the other day, and now it's on here again. So negative 4,400 million delta today. The other day it was like 200. And we got this look. So the one thing I showed my room a couple weeks ago, this actually showed you, where's it at? Can't find it. Oh, this is Tesla now. I'll show you PayPal here in a second. So the other day, on this move, this was like minus two, I think it's like, I have a screenshot, but it's like 250 million. And then we did that. And now today you have another 400 million. Yeah, the market's agreeing with it, but so, meaning it's like, this is why we're dropping because of the options, most likely. But this setup, this is the first time I saw it that I started paying attention to it. This was a couple weeks ago, this PayPal. We were over here. And it was really interesting. It was right here. So this was this day right here, right? and it was like negative 150 million delta. And I'm like, okay, that's interesting. I'm gonna keep an eye on this. And then for the next few days, it did this, and then it finally went like this. Look at that. That's 40 points, 35 points of like was kind of forewarned, right? Like you saw, we were down a little bit that day. But why I also liked it, and I'm like, this is why I'm gonna keep track of it, because structure-wise, this looked like it was gonna do what it did. But then you get the options info too to kind of confirm it. You got that. So Tesla's doing the same thing. It's kind of happening as it's coming in. But so anyway, I'll keep an eye on this for the SPY and the SPX. So let's look at the SPX here, because you want to, if you see huge divergences, you want to be very careful. So this isn't bad, but you can see here, look, right? This is not a red light, green light thing. That I see people in the Hero Bookmap room all the time. I don't understand. There's a divergence, and I got long, and the thing was sold off 50 points. This is, you want to keep an eye on this, because this is probably eventually going to happen. So you can see, as we sold off here while we've been on this webinar, the options delta, and this is total between puts and calls, right? You can just have it at total, but this was moving the other way. That's a divergence. So the market's eventually going to say, come up. Now you can see what's happening. Now this looks like this is going to cross. So what you want to watch here now, and it might not happen right now, it won't, the market may do this, that's the black, and then this turns around and comes here. Well, guess what? Eventually this is going to turn around. Do I trade solely off this? No. But when you get, like, say we rally up and we get, we come back to an important area, and then you see huge divergence, you're like, okay, I know the options is in my favor. Here's my SI indicator setup. Oh, we're at an important area. Like, let's see where we're at here, because this is probably what's going to happen, right? This is a great example here. This is today's trade. This is the most recent value area. This is 2 days. So say we keep rallying, we get through the VWAP, yellow lug, we rally up, and then we come up to here. And you see that huge divergence in the delta. You get a sell ice order here. There's liquidity down here that didn't get filled last time down. You have all those factors, and then say we're at, like, that would be close to positive 1.5 standard deviation of VWAP. Now you've got like 4 things that tells you that that's going to happen. It just gives you confidence to hold on to the trade. And that's probably exactly what's going to happen here. I would be willing to bet. This is an important area though. So then talk about confluence, you got one right here. So if I get a signal right here, I'm in. You got VWAP, you got yellow lug, you have point of control for this 2-day. Point of control is just where the most trade occurred in this value area. Value area is 70% of the trade for the last 2 days, because I merged them. Again, just for you guys that don't know market profile, this is what it looks like. Actually 3 days. So this is, if the days overlap each other, so this is the value area. Value area is set. Here we go.
703 contracts.
I mean, Bruce, do you see the effect I have on these markets? Do you see that? Actually, this could actually be me putting in this big size, so I just want to let you know, because I'm back to trading 3,000 lots. So, just kidding.
Oh, that's why.
Yeah, that's why. Here you go. 6. This is almost threshold on its own. This did. Whoa.
Stopped by ES. 593 contracts.
All right, so this might be a double whammy, a delayed double whammy. So you had sell ice. Between these two, it's over 1,200. Now you have a nice puke, 600. I'm going to draw this zone, and I'm going to be very, very excited to trade it on the short side.
S&P E-mini sell ES.
Here you go.
700 contracts.
Right on cue. Got that. And I'm going to incorporate this as well. Just make sure I got all the prices right. So you just take your little crosshair and you scan all the prices until this ended, just right there. I usually try to make my double whammies dark blue. So this is one of my 6 setups, right? This is dumb. It's a little delayed, but this is the dumb money puke in the sell ice. Sell ice came in a little bit before, but here's your puke, and here we go. Now I'm shorting this aggressively because I know we're at the yellow lug, but we came to the yellow lug from the bottom, and we also talked about point of control, VWAP. Look at all these things that are confluent with this potential short. 9.31 is your ATR, so we will make 90% of that, which is 8.37. I round up, so 8.5 points below here. I will short this. So the zone is about 5 points wide. And I know I have to risk 8.5 to get in, 8.5 above the zone to get out. So that's 17 points plus the size of the zone. That's 22 points of risk. So then I go to my risk calculator and go to 22 points. That means I can put on a 2-lot based on my account size. Most important thing you guys can be doing is following that, because if you're overtrading your account, you're going to blow out. I'm not even going to go down that rant road today, but so 8.5 points below here, the bottom of this zone is, let's say, 13 quarter. So that puts me 5 quarter, 475. So where I will short this. And everything we were just talking about before it magically happened, why I would want to be short here. Now I have my driver, right? I was waiting. I knew where we were. This is what we were just talking about, right? This is the point of control. We'll go over this here in a second. But VWAP, yellow lug, came to the yellow lug from this side. Now you have your volume. Incident, not incident. What's the word I use? Volume event. That's the driver. That's why I'll play. If it breaks there. If it breaks below. Will I go long? Absolutely. I'm a day trader. I think these markets are going to zero, but I mean, not literally, but I think they're going to get killed over the next weeks or months. Doesn't mean I won't go long, especially at the volume. So if this market is truly bearish, this should not do this. If this does this, goes full ATR, retest failure, then I'll go long. I'm expecting that, but I'm letting this dictate what I'm going to do, because this is what matters. My opinion does not matter. Yeah, I have an opinion to make decisions, but the market doesn't give a flying you-know-what about my opinion, right? So this is what matters. Did I mention this is the biggest edge you can have in trading? Did I mention that yet? All right, so there's my trade. If we come down, I'm in this aggressively because we're back below the yellow lug.
Here's something though, Scott. I mean, I'm sorry to interrupt for a moment. But this is just so important. Look at the steps and the actions here. Number one, Scott noticed this event took place, this important event, Stops and Icebergs. It's also a lot of volume that just traded, and also it's an important area. Did he get long, and where did he set his orders? Okay, so or did he get short? Like, did he enter? No, it's in context now, and looking for follow through after the event. This is the procedure. So this is just so important to I think us. Great insight from you as a very experienced trader of like how you're handling this. It's not a signal to go long or short. It's to look at the market at this point and start looking for different scenarios to unfold, and you're prepared for them.
Right. And what we talk about all the time is, this is my method of trading this after trading thousands of these, right? You may say, hey, Scott, you just pointed out 4 different things.
S&P Iceberg by ES.
No, I got biased too.
700 contracts.
And that's fine. Like, again, when you're long, you'd like to see buy it. You like to see the big money agreeing with you. I look at it as this is still just an important area, right? So this is an invested area, right? So what I was getting at before that came in, and I'm going to expand this on a little bit because I want to incorporate this as well. So again, if you get a bunch of setups in the same area, just make it one big zone. You don't want, I mean, you could make this its own zone, right? You can make a zone based on this. And I would if it was a little higher, but this is all within each other. So I'm going to make it one big zone, and I'm still going to trade it to the short side. But what I was getting at was, you may say, hey, Scott, you just showed me so many reasons to be short here. I love that idea. Oh, here in the sell ice, I'm going to get in, I'm going to get in right in the middle of the zone. And then I'm just going to risk above it, whatever. I would definitely go at least a half ATR, if not, well, again, that's getting off subject. But the point is, I say it every webinar, this is the science. There's no disputing this was sell ice, buy stop, run, buy ice. There's no disputing that. That's what happened. How you trade this is up to you. But I tell my trade room every day, I highly recommend, if you're a struggling trader, if you're just learning these, you trade them exactly like I do until you get comfortable with them. Then you can put your own spin on it. That's the art. You can say, there's enough going here. I don't need to see 90% out of here. I'm in right in the middle of the zone and I'm gonna put my stop above it. Fine. I wouldn't give you a verbal lashing for that at all. I'd say, okay, that's the way you want to trade it. Fine. I'm telling you, this is how I trade it after watching thousands of them. So you can either take my advice and trade them like that, or you can come up with your own system. If you watch enough of these and you say, I usually trade your style, Scott, but there are instances I want to be aggressive. I'm perfectly fine with that, just as long as you put your stop outside of the zone. You can't get in this middle of the zone and then put your stop in the middle of the zone. You're going to get stopped out, very, very likely, right? So this is how I trade them. I would not fault you one bit if you said, I just want to be aggressive in here and give this a shot, right? That's fine. I wait to make it prove to get out of here because, again, I don't really know what these setups are yet, right? I don't know if this rips up and goes a full ATR. Well, that's bullish. That's not bearish short term. So then I'm looking to go long off this zone. If this just breaks aggressively, then aggressively I'll go short because of the lug what we just went over. But for me, I have to see a move out of here to determine what I'm going to do. That's it. But you can do whatever you want. It's your money. All right, so back to this quickly, what I was showing you here. So all these days, this is a very important value area, right? Composite value area. So this was day one. 70% of the trade happened that day. Let's look at the dates here. This was Monday, obviously, right? Or Tuesday, Monday. All right. I'm sorry for you guys that are advanced saying this is so elementary. You got to remember there are newer traders on here. This is 70%. Here's the point of control. That means out of this 70% value area, they call it value area, where 70% of the trade occurred, this is the price where it traded the most. They call it point of control, right? This is the next day. Did 50% of this value area overlap this one? Sure did. So I merged that. Okay, so now we have a two-day profile. Then this was yesterday's trade, right? In and out, in and out, in and out, and it just basically just stayed inside. Does 50% of this day overlap this? Sure does. Merge that. Now I have a three-day powerful composite. It's not a coincidence that the market opened up and it couldn't stay out of here and went right in. And when markets accept in the value areas, especially composite value areas, the tendency is to get to the other side. Wow, look at that. Perfect. So if you know all this, we get in here, you get to say we didn't get a volume signal up here, unless you traded it overnight's Dumb and Dumber. That was perfect, of course. You get a volume signal, you're like, go time. We're in here. Here's my bearish signal. I know there's volume here that real-time volume that's confirming my thesis of entering back in and going to the other side. You catch this entire move, right? And that's it, guys. It's just having an idea what the bigger picture looks like. And so again, it doesn't matter if this setup turns out to be bullish. I'll go long and I'll ride it up to this, and I'll watch very carefully as we get up to here and or red lug. Right? I definitely would get out of some here because, again, that's 1.5 standard deviation. That's close to baby lug, but that could definitely happen too. I don't oppose my will on the markets. The markets don't give a crap what I think. This is what the markets care about. The invested traders that are caught, so on and so forth. So now we wait. So that's that. And natural gas has not retested that zone, but if we retest fail, I'll take a short there. I'm very surprised there have been no setups in grains today. You guys need to be watching grains at least. I don't like corn. I mean, it has been moving around lately, but beans and wheat, it does not matter. I don't care what name you put on this. It's the same stuff. Liquidity, SI indicator, markets react to the area. It's the same stuff. It doesn't matter. That's why I watch 15 markets, right? Because I understand some traders don't have the bandwidth to watch 15 markets, right? That's fine. You need at least 3 to 5 that you're watching, so you're not pigeonholed into trading this donkey like we referred to before.
I really appreciate that comment, Scott. I mean,
About the donkey?
no, actually, I do. Maybe even more than I want to admit. But it's funny. It's funnier, put it that way. What I really appreciate though is look at like this kind of fearlessness of looking at all these different markets, but you know what you're looking for. You're looking for something to tip you off to some sort of edge in here, using stops and icebergs, and then context Okay, great. You got the kind of alert about stops and icebergs. Now, what's going on in that market, and how do you want to position yourself for gaining an edge? Yeah, really, really nice. It's many of us look at just one or two markets and leave it at that.
Yeah, you're doing yourself a disservice, and you're probably going to cost yourself money at certain points because you're forcing trades. It's like, I got to pay my rent, I got to make money, I got to put on a trade here. That is a one-way ticket to blowing out your account and not trading. So you have to be able to say nothing's going on here, move on to the next market. Nothing's going on there, move on to the next market. And then you just sit here and listen and you wait, right? So between tick strike and the SI indicator alerts, you always know what's going on in these other markets. So something starts firing off, you just pull that puppy over, right? Like natural gas, waiting here for this to retest, whatever you're watching, and then you just trade it the same way. Whether this is ES, NG, NQ, or TY, it doesn't matter. It's volume. It's invested traders. It's knowing the areas. It doesn't matter what futures market you're trading. If they had this for stocks, I'd use it for stocks too. That would probably be a little too much bandwidth needed, but I would.
Yeah, it's too bad. I mean, it's a number one request is to have stops and icebergs for stocks. However, look, when it comes to these types of things, I mean, Bookmap is very data dependent or high quality data, and Rhythmic offers it, and they're the only ones offering market by order data. That's it. It's not that we
Which is
have.
shocking.
It's
just
shocking.
completely
It's. I think the industry is just kind of antiquated and trying to wake up to what's going on now. Rhythmic has been well positioned, but that's
Well,
my
I also
opinion. That's
get
my opinion, though.
right. I also get all the time. I literally got more than one email about this. Well, what happens if the CME takes away the MBO data? What are you going to do? Well, I mean, is that a possibility? Absolutely. Do I think that's going to happen? No, because again, I don't know this for sure. I just know from what I've seen from the CME over 25 years. They used to have, I told this story before too, they used to have counterparty where you can literally, I would have a screen up like that. It literally looked just like this. It was at the bottom of my TT screen. Trading Technology at the time is what I used, right? In every trade I placed, you can see exactly who you traded with, the house number, right? So we were 023, King Street Trading was 023, Gelber was 990, that was my nemesis. But then you'd have like Merrill Lynch, FEMAT, I think FEMAT was 714, I want to say 660. And I love some of you old floor traders are going to know exactly what I'm talking about. 660 was Morgan Stanley, I believe. So anyway, this would tell you exactly who you're trading with. Well, you think that's an advantage? When I drop in a 500 lot or a 1,000 lot and I see it's all one local is like a day trader type of trader. I know, okay, and when you do it every single day, it's like playing a poker game. So I drop in 1,000, it's all 990. I drop in another 1,000, it's all 990. Well, I know the guy can only take so many contracts, so now I wait, right? So it's like, so I say sell him 1,000, sell him another 1,000. I look over, I just see 990, 990, 990. I'm like, okay, I know it's not the big house, a big player. I know it's just a local. So then I wait, and it starts to move against him. Then I would just step on the gas because I know he's out of bullets, right? And they turn around and puke out the position. So shockingly, they got rid of that, right? CME got rid of it. So my point is, what I'm trying to get at is, can they get rid of this information? Yeah. Do I think they're going to? No, because they got to a point there, probably within the last, I'd say, between 2010, 2015, where, algos are over 90% of the market, right? So when you get to that point, who are they taking money from? It's like shark eats shark. That's not, the big money doesn't want that. The big money wants you in there so they can take your cash with their algos, right? If you guys don't think this is what's happening, then again, you're clueless or just clueless. So they want your money. So I will be willing to bet anything that the reason that this is still around is, yes, the big money. Do you think they like? I mean, the whole idea of these icebergs are to hide their orders, right? So they can't be happy that we can see this, but they also know if this goes away, they're knocking out a lot of retail traders, and who are they going to take the money from, right? So I think this will stay around. That's also why I think, and Bruce has never, I don't know if he knows for sure, but I'd be willing to bet like every CME market has the CME MBO data except the currencies. Why do you think that is? If I were a betting man, which I am, I'd be willing to bet that some of the big players in the currencies, 6E and whatever the other ones, because you can't see icebergs in there anymore. You see them before, now all of a sudden you can't see them. I'd be willing to bet the reason you can't see them is because they complain to the CME and they pull that information. So it could happen, obviously. I don't think it will for the rest of these markets, but it could. So again, I'm getting off topic. The point is, yeah, it could go away. So let's make as much money as we can before it goes away. How about that? And if it goes away, I'm sure Bookmap will come up with something else, right? I mean, you can trade with your basic setups and your structure and liquidity and the buy bubble, the market orders. There's still a way to make money. It's not going to ever be as great as this. So yeah, it could go away. So make as much money as you can before it does. How about that?
That was an excellent rant.
And the thing is, I know I'm right, especially about the currencies. I'd be willing to bet anything on that. But obviously, can't confirm that.
The let's see, trader McStockster's asking about when you get overlap levels on your volume profiles of 50%, then do you merge them?
Wait, say that again?
When do you merge your volume profiles?
That's what I just went over.
Yeah,
Who said that? Who asked that?
there's a question in here.
Well, you might have asked before because I just said that, right? So if 50%
There you go. That was the
or
number.
close of this day overlaps the prior day, which is probably 75% of this day, right? Overlap it, then you merge them. You know, the one thing I don't like about market profile is a lot of guys they make it too much of an art, right? So you'll see a big day, like a huge. I'm sure we could probably find it in NG. Let's see here. Let's see. Go back, but you'll get like a huge day, like beans or something, right? And this might be one here. It's not good to look at it that way. This might be going. So say that one single day looks like this or something. You have like this big spike, and then the value area occurs. Well, they'll turn around and they'll cut this day out. They'll cut this part of the trade out of it, and then it's just. I don't like that philosophy. I don't like making this an art. Use this as much of a science as possible because you want to be trading areas that other people are seeing the same stuff, right? Because that just bolsters your area. If you're starting to cut profiles off and all this other nonsense, then I just don't believe in that. I don't touch these things. All I do is merge them. So most of the people don't even know what I'm talking about that don't understand market profile. But if you ever approach someone that cuts stuff off, just be very wary of it because I just don't think that's the way to do it. I think you just keep them like they are, and you merge them when they overlap, and you make composite value areas. There you go, and you see how powerful they are. And then you can come up with stories every day based on what the market is doing around them. So your story could have been at the open. All right, I'm watching this. We were up here right overnight. I want to see if it bounces off that. That's bullish. Okay, then I'm looking for my bullish setup, and then I'm going long. And you could just be waiting for that exact setup, right? Or my story is, hey, we accepted in here. Here's a bearish setup. We just talked about this. I'm betting we get to the other side. Exactly what happened, right? So you can come up with stories based on what the market does at composite profiles. And
Trading,
lows.
stories. More specifically, I think trading scenarios around that to be set up for understanding. Again, like context here. Like I'm sorry to add to the rant, but this is just really important. Like understand what it is showing you, and that is a profile is a composite of data. Some of that data is old and doesn't matter anymore. This is something that is a limitation on profile. What matters now is the real-time volume at the moment. Like, is it moving the
Right.
market?
Or respecting those areas.
Or
respecting the areas.
respecting
Right.
those areas, and that's a big limitation because people look at the profiles like it's the holy grail, and just understand that. Well, it's also a composite of a lot of older data. If someone moves the market quickly away from that area, it just doesn't matter. It's not gonna come back. So, so
Right.
just keep it in context is I think really really important. Understand what they are. Anyway, that's my rant.
No,
See,
for sure.
look at the influence you have, Scott.
You don't want to go down that rabbit hole of ranting. Trust me, it's not fun. I leave these webinars and my head is just pounding because I get so worked up about stuff.
We really lots
Um,
of comments in here. We really appreciate you, Scott. So
sure. Again, I've even gotten even when I first started talking about the SI indicator a few years ago, you had other software programs that are like, oh, that, this is a lie, and it doesn't matter you can't just judge buy iceberg. It doesn't mean we're just going up if a buy iceberg comes in or down if a seller. And I've never once said that's the case. I said the area is
right,
important, right, first and
right.
foremost. But then I had other people telling me, I lost my train of thought. What were they saying? Um, forget what I was going to say now. My ranting has messed up my head. Um, it'll come to
You're 50 now, so
yeah. Tell me about. I feel like I'm 90 mentally. Um, actually, I take that back. I feel like I'm
you're
15
probably more
mentally.
like 12 or 15 or something mentally.
Right. Right. Some of
Just
the stuff I talk about and think about, I'm like I'm a 15, but I got I feel like I'm 90 physically. Um, God, I can't. It was a good add to the rant, and I can't remember. All right, so hopefully it'll come to me. So we're just waiting for this to get out of this zone. Obviously, the longer it sits in here, when you see zones like this and then it just sits like this, it's just guys holding their breath. Like, okay, because they're fully invested. Now, which way are we going to break? So all the longs that ran into the sell ice, we move out, they puke. All the shorts. I'm sorry, these were shorts. No, I'm sorry, the longs, the aggressors were longs that ran into the sellers, or the sellers that sold into this buy ice. We move up, they got to puke, right? So that's the whole idea. That's what's happening in these markets at all times. It's just guys invested, guys puking, guys invested. We talk about this in terms of structure. Markets are in one of two states at all times. They're either balancing or conviction. Balancing, well, this was the conviction there, but I mean, you can find it everywhere. Balancing, conviction. Balancing, gaps are conviction as well. So they're one of two states, right? And what is conviction? Conviction is puking. That's what conviction is. Yeah, yeah. There's firms initiating positions, but a lot of it is just guys. All these longs that sat in here for days and days and days. The longer term traders, they thought they had it. No dice. Gets to the high volume node of that, puke. And then that's what we're waiting for here. You see this. This is 3 days, basically a balance. The next move out of here is going to be directional conviction, most likely, unless it's a head fake. But then the other way is going to be directional conviction, right? So now we wait. Look where we're at. We're right in the middle of this thing. That's not a good place to be trading. So you can come up with rules where you say, you know what, I only trade at the tops and bottoms of balance areas, or when we break out, and retest, fail. That's when I trade. The more specific you can make your trade plan, the better you're going to do, and you're not going to confuse yourself on every single move that happens in the market. Most traders try to make sense of every single thing that happens, every move that happens in the market. You're not going to. It's not going to happen because it's 85 to 90% algos. There's no rhyme or reason. The rhyme or reason is to take your money by whipsawing you. God, I wish I could remember that rant.
I don't know. You're talking about different strategies or something like that, and maybe art forms or something. I don't know.
I don't know. Just one of your rants. Can't remember. Oh well. We'll save it for another ranting
15
webinar.
year olds, like I feel like I'm about 12 or
Was
15
not talking about
as well.
15-year-olds.
Okay.
I had a 16-year-old, so I definitely wasn't talking about 15.
Okay. All right. Um, so let's see. I think we're all caught up on questions.
Okay, and I think don't you have another trader coming in here? Am I going in? I'm going in this time, aren't I?
Yeah. We got to get going here. We Tom B, everybody, is up next. If you want to join and continue the live streaming over there at
Oh, I remember.
okay.
So I was getting literally. I had one guy contact me on Twitter. He's like, Why would you give this information? Why you have this edge? He's like, you see all these big traders, these big fund managers. They you don't hear one word from them on Twitter. They don't say a thing. They don't do webinars and telling their secrets. I'm like, what are you talking? I'm like, I'm just showing how to read the volume. And I go, if anything, I am 100% for the retail trader to be able to compete because you guys got to remember the very beginning of this webinar. What did I talk about? How I got knocked out of the game, right? I have PTSD to this day from being a multimillionaire to not be overnight. I went from making millions of dollars to couldn't make a single cent in the market, right? That there's a saying out there I've said before, having money and losing it is much, much worse than never having money at all, right? Because when you have it, you know what it feels like. And when you lose it, it feels not so good, right? So my point is, I will do everything I can. Like people really think that like there's something behind my motives that, this doesn't work or I'm just trying to make money, blah, blah, blah. I legitimately am trying to help traders, the retail trader, compete against the 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 man, right? The houses, the big money that manipulate the markets. The markets are 100% manipulated. But if you, again, like I said before, if you know what they're doing, if you can't beat them, join them. So my whole goal, yeah, I want to make money trading, and yeah, I charge for my trade room and I charge for my courses because that's my time, right? So yeah, I'm going to charge for that stuff. But I compared to what some of these other I'm doing air quotes again, educational guys charging like $10,000, $20,000 for stuff. It's like what you get is what's really happening in this market. And again, I am a proven trader. You show me track record of any educator out there legitimately that's made $15 million in a trading career, and then we'll talk. And then I want to go head to head with them too right now in these markets. So the point is, guys, I'm trying to help you get better and understand what's really going on here. And if you think there's other motives, then you're just a pessimistic jerk, basically, because there's not. And it makes my pride and joy is obviously I want to make money, but when I see other traders in my rooms making money and understanding what's happening, that is 10 times worth more to me than making money. It's just to see guys get it, right? And guys that don't get it, that's the guys that get the verbal rants in my room when they come out and they're doing stupid stuff and putting their stops in stupid spots like that. That's the stuff that drives me crazy. So I'm for helping you guys first and foremost. So that was my rant on that. But that got me going because the guy's like, why would you do this? Why would you tell people your secrets? It's like there's no secret. It's market. It's volume. That's not a secret. All right, that's my rant. I know we're in another guy's time, Tom's time. So I will get short this unless something new comes in. Then I may have to move it. But I will short it. Yes, I think we're going right back down here. And you see, be careful with liquidity that comes in like this. By the way, because this is just guys that could be playing games with the market. The liquidity that's been in here forever, that's what you want to watch. And this has not really been in here forever. This came in a little while ago, but remember this stuff down here. And I'd be willing to bet this is where we're headed because they got front run. They can't be real happy, so they're going to push it right back down here and get filled. And you can see they put more in right here too. So, all right, guys. So I'll short that. I will short natural gas on came close to a retest. Didn't quite get there. Retest failure there. I will short that. And then just waiting for some new setups in these other markets. But once again, this is what I do every day in my trading room, twice a day. And then you got really good traders in there as well that are posting stuff so you're never missing any. So I highly recommend if you want to learn more, come over there. All right, that's it.
All right.
Lots of rants today.
Yeah, lots of rants. Yeah, we do have a Discord room, everybody. So I'll put the link into the YouTube there, and so you guys have it. And just want to also, mention Tom B starting up here, as well as if you like this, please like it in YouTube there, and add your comments in. It would be much
And
appreciated.
if you don't like it, I'm coming after you. So you better hit that thumbs up. There's going to be problems. It's a joke.
There you go. You have Scott coming after you. Yeah, keep that in mind with your comments.
How many people are on YouTube right now?
Just
Did you see
kidding.
that?
Yeah, we had about 80 in there, 83 or so. Now they're starting to bail. So everyone knows that it's ending here.
All right, Phil, by the way, this quickly, just to go over this, my stop, 8.72, so I take 90% of that. That is 7.84, so 8 points, I round up, so 8 points above here is my stop. So 20, basically 42, 42.28.
Yeah.
Again, that's just adjusting it to the dynamic volatility. Right?
Yeah, and also this is only for educational purposes, not a trade recommendation here. So you guys know why
Right.
we are doing this as well.
That's why I'm taking the trade. All right, I will thank you, Bruce, for having me. I'll see you guys all on next Thursday.
Okay, thanks, Scott.
Thanks.
Take care, everybody. Bye bye.